Hi everyone, let's go over my preferred and alternative medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with one of the two medium time frame preferred scenarios where we're looking for still a move towards the downside in a WXY with price currently inside this green wave X. Inside this green wave X, we're then looking for an expanding flat, which is a 335 wave structure, where currently we're in the 5-wave move to the upside and then a wave C after wave B hit the target area for wave B in an expanding flat perfectly, which is the 1.236 to the 1.38 taken from the low of W to the high of wave A. Now, wave X, as it stands now, is already longer in time compared to wave W, as this wave X, from beginning of W to where we are now, crossed the 1-to-1 fib time. And the fib times that you see on the chart, the vertical lines, are taken from the high of W to the low of W, and then you double click over here to compare the time it took to develop W to the time it takes to develop wave X. And the fact that wave X is already longer than wave W, well, I want this 5-wave move to the upside to happen relatively quickly, because the longer we're ranging over here, the more I'm gonna think about other scenarios. If we look at the potential target area for a wave C though, which is the white box, we're looking between 28.9k and 30.4k, which has a point of control at 29.3k and also a triple top at 30k for maybe a liquidity grab and then a move towards the downside. The second preferred scenario over here on a medium time frame is a WXY, where again we are expecting another low, interestingly, right? So then we have this as a finished structure and then a wave X, and we're currently working on a longer wave Y. Now in this scenario we then have a 3-wave structure in then a wave W, followed by potentially over here an ABC zigzag structure, which is a 5-3-5 move, and then we get another 3-wave structure to the downside for at least new lows. Now, if I open my target boxes over here, then what I've done with the potential measurement of this wave C, because the 1-to-1 and the 1.236 are the most common target areas for a wave C that you pull from the low of W over here to the high of wave A to then the potential low of wave B. And what I've done is I have estimated for now the low of wave B to be around this target box over here, which is then at 25.9k to 26k. So then you would expect this to be a 5-wave move followed by a 3-wave structure and then another 5-wave move to the upside, where then the 1-to-1 for wave C is hitting this blue target box over here, which is sitting at 28k to 28.1k. So that's actually nice confluence. Now, of course, in this scenario, it is relevant that we are going to find some more downside before moving to these levels. If price is going to continue pushing towards the upside without a retracement to the downside, this scenario becomes invalidated. If we then look at the alternative scenarios that I have on the medium time frame, then this one is already a finished WXY. So we have a WX finished wave Y with a 3-wave structure hitting the yellow target box, where we were looking for longs over here, right? In one of the videos, we had a potential long setup. Of course, you always need your own plan, your own strategy, whatever it is that gives you the confidence to enter over here. But so far, the bounce has been nice. Now, if this is a finished wave Y, then we are now looking for a continuation to the upside in an impulsive structure, right? So we're then working on a 5-wave move to the upside, and we want to see eventually 31k taken, because now this corrective structure is finished. Now that also means that this over here looks to be a wave 1 currently. It doesn't look crazy impulsive. It does look impulsive, right? You can count an impulsive structure in here, but you know, we're still waiting for a move to the downside and then eventually another move to the upside, where then this is going to be either a wave 3, and in this scenario you want this to be a wave 1, 2, and then eventually a wave 3 to the upside, or wherever wave 1 is going to end, 1, 2, 3, it doesn't really matter. But in a wave 3 to the upside, you want to see volume pick up with price, and you want to see a wave 3 being more parabolic, right, in this scenario, where if we are looking for an ABC like this, then a wave C tends to be a bit more lazy, and also the volume tends to be a bit more lazy as well, not as parabolic as with a wave 3, and also the price action of a wave C is usually not as parabolic as a wave 3. Now the second alternative scenario is that we have still a low to go, so then we have a WX, but then the wave W is here. So in the other scenario, the preferred scenario, wave W is over here, but now wave W is on the left. And in this particular scenario, this is then a 3-wave structure followed by an ABC expanding flat. And actually the reason why this is an alternative, because it was very close to actually potentially being a preferred scenario, but the reason it's an alternative is that this wave C over here you know, it has to go above the high of this wave A, preferably, else we're talking about a running flat, which is extremely rare. A running flat is a flat where you have an A, B, and then C is not taking the high of wave A, and that is actually that is a very rare corrective structure. So preferably, you're looking for price to take this high of A. But if we count on the lower structures, which we'll go to in a second, then this might already be a 5-wave move to the upside, or this might be wave 5 over here, after which we then expect a corrective structure to the downside, which doesn't really work in this scenario because you want to see one move to the upside. You don't want to see something like this, right? You want to see an impulsive structure, straight line to the upside, where then a minimum target usually for wave C and an expanding flat is the 1.618 taken from the low of W to the high of A to the low of B, which is in confluence again with the target box around 28k. So that is nice. Confluence, the invalidation being the high of this wave X. So we have to wait and see how price is going to develop. If you then go to the lower time frame scenarios, I'll jump to the 1 hour over here. And in this particular scenario, we are looking for an expanding flat. Now, after the video that I made this morning, I immediately, actually like a few minutes later, I jumped to Discord and I was like, shit, I actually forgot a scenario in the video, which was the expanding flat. So at 7 a.m. this morning, I posted the video, and at 7:36 over here in the update section in the YouTube Silver group, I was like, yo, we got this potential expanding flat over here on the 1 hour. And I said, I actually forgot to show this in the video. Well, here we go. Right now we have it in the video as well, where we then have this as a corrective 3-wave structure in a wave A, followed then by a very weird, like this structure in general is a weird structure to count, right? So that's why I don't have micro scenarios at the moment, but we stay a little bit on a higher time frame, because, and that's also something I recommend, little sideway over here, that if things get confusing on potentially lower time frame counts or micro counts, then zoom out. Don't zoom in, because that's what many Elliott wavers, new people are doing. They are going lower and lower and lower and lower all the way to the lowest time frames, but instead zoom out and go back to the global picture. So in this particular scenario, this is then a 5-wave structure, finished, followed by a 3-wave A. Then we have a 3-wave in wave B, expanding flat again, expecting then a wave C towards the downside. Now wave B, the wick in the 1 hour hit the 1.618. However, the 1 hour candles closed perfectly inside the most common target area for wave B, taken from the high of 5 to the low of A. So that is very nice. And then you expect an impulsive structure to the downside in a wave C, and then a 3-wave A, 3-wave B, and then a 5-wave C. Most common target for wave C is between the 1.618 and the low of this wave A. So that is why the white box is over here. And inside this white box, we have this support area, which is between 25.9k and 26k. So that is very interesting, that if price is going to move to the downside impulsively, this is definitely an area of interest for then potentially a bounce and then continuation to the upside. If you go to the second preferred scenario, so that was the first preferred scenario. The second preferred scenario is this one. Because, and the reason there's two preferred scenarios sometimes is that the result is the same, right? So in both of these scenarios, we are expecting a move to the downside. It's just the way it moves to the downside depends what scenario is going to be the eventually preferred scenario, but the result is the same. That's why you can have multiple. So in this scenario, we then have a 1, 2, 3, a 4, and then a 5 to the upside over here. This is the most common target area for a wave 5, taken from the high of 3 to the low of 4. Wave 5 might already be in. Of course, you always have the potential, you know, again, confusing low time frame price action. Again, you could have potentially a move up, a wick up, and then down, but this is the most common target area for a wave 5, to then finish potentially a wave 1 or A, followed then by a corrective structure to the downside in a wave B or 2, and then you expect a C or wave 3 to the upside. Most common target areas for a wave 2 as it stands now, taken from the low to the high of 5, is the 0.5 to the 0.786, which is between 25.9k and 25.2k. And what's interesting is that the 0.5 is lined up with this target box over here. And for wave B, the common target areas are all these fibs. So in this particular scenario, you expect again a move down before continuation to the upside. And then an alternative scenario that I have, because it is relatively rare, is that this is a finished impulsive structure in a wave 1. This is then already a corrective structure in a wave 2, but it retraced to the 0.236. Now that usually can only happen if wave 1 is an extended wave 1, which means that a wave 3 and a wave 5 are going to be shorter than wave 1. which therefore means that the target for wave 5, which we can calculate with a trend-based fib extension from the low of 1 to the high of 1 to the low of 2, and then we put it on wave 5 targets extended over here with an extended wave 1. This is the target area for a wave 5. So then you want wave 3 maybe being over here already. Then you have eventually a wave 4 and then a wave 5. And wave 5 then ends in between the 0.618 and the 0.786, which is between 27.5K and 27.8K. And what is interesting about this area is that it is very close to this double top that we have over here for maybe then a liquidity grab and a move towards the downside. The only reason then this is an alternative is because a wave 2 and an extended wave 1, so wave 2 reaching the 0.236 is very, very rare in general and only really possible with an extended wave 1, but an extended wave 1 in general is quite rare as well. So that is the reason why this is an alternative scenario. So there you go. If we then go to the CVD, then I think it is important to talk about what has happened and what might happen. So on the lower time frames before these pushes to the upside, we had bullish CVDs building. So we had bullish CVDs over here that played out, taking this high very nicely with this push towards the upside. Then price moved down again, creating more bullish divergences, higher low on price, lower low on the CVD. I will show you that in a second on the live chart, the CVD chart, for then the second push towards the upside. The target was this one over here. That's the first target. And then of course you can have multiple targets, as also I show on the one pager, by the way, in case you're interested. The one pager can simply be downloaded in the Koenz updates section over here. So that's version 1. Version 2 is already made in the good to know section in case you want to know how to trade CVD divergences. But then this second leg to the upside played out. So the bullish divergences played out very nicely. So what's now happening, right, on the lower time frame? So let's jump in. 15-minute, quickly do a quick refresh over here. And then you will also see that we had the bullish divergences here, higher low on price, blue line, lower low on the CVD. Price came back, still creating bullish divergences for the second push. And then now over here, this was leading, as you can see, by the way, lower high on price, higher high on the yellow line. That's leading CVD divergences. But especially, and I actually said that in the silver updates group as well, that if you get a big push to the upside and a move to the downside doesn't have a lot of structure, not a lot of clear waves, it's just like a straight line, these type of divergences tend to be leading. So yeah, that is something that eventually was leading indeed, moving to the upside, taking this high. And then now on the more local time frame, quick refresh again, because what's actually annoying right now is that sometimes AGGR is twitching, like it out of nowhere goes far up or far down. You may have experienced there that, like, it just happened. You saw it, it was red, bam, it goes green, and if I refresh now, it's back to red. So a little bit weird, but over here we have then a structure to the downside, no bearish divergences yet, but also no bullish ones, right? So, I mean, if we talk about bearish divergences, maybe on, like, let's say a 5 or 3 minute time frame, very, very locally, but what I would prefer to see is this move to the downside, then see another move to the upside, where then during this move to the upside, this is fake, right? Remember, it's twitching. So if I refresh, there we go. Then we have a lower high on price, but then create a higher high on the CVD. So price moving to the upside over here, CVD going with price to the upside, then creating bearish divergences. That's something that would be nice to see if you get that opportunity, where price is then, you know, moving to the upside over here, creating a lower high but a higher high on the CVD, and that could be a very interesting potential entry for then a short trade, right, in this particular scenario. So we have to wait and see how that is going to happen. Now finally, I am going to France tonight. More about that in my video at 7 p.m. I am going on a holiday for a few days. I will take my microphone and everything with me. I know it's a bit of a messy month with the videos, but I will try to make content for you guys while I'm there. The holiday was already booked like half a year ago, you know, so the channel wasn't even alive back then. So sorry for the messy June, and then I'm away in Croatia and France and stuff. But, you know, I'm really doing my best to deliver you the best content I can, and also the most amount of videos on a day that I can deliver to you guys. And I will try my uttermost best to deliver you content while I am in France. I'll take my whole setup with me. So please, please, please take this into account, and I hope you understand. So that being said, I hope this video was helpful or valuable to you. Please check out the memberships and the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.